The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 21st, terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. And that's what life does. So, folks, let's go take a look at the circumstance of these markets. What the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free, pick up that phone. Now it's not too early. 877-927-6648. Would love to hear from you. Of course, you can send me an email, steve@tfnn.com, and inside the den, just go ahead and ping me, and I'll be happy to take a look at whatever instrument, whatever time frame it is that you are looking at, and assist you with your trading decision. So let's go ahead and get this show started on Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading back 92 points at 18,503. S&P down 8 at 2165. NASDAQ Composite off 13. She's trading at 5076. Russell 2000 down 5 points at 1204. The DAX finished up 14. The FTSE down 29. The ES gold is up $11. Silver's up 16. Light sweet crude down 75 cents, trading at $45. Leading the charge here to the upside, you get Biogen, BIIB up $19, 7%. Alliance Data Systems, ADS up 6%, $13 or so. Relipsa up 58%, whatever that is. That's up nicely, though, $11. Humana up $11. To the downside, it's Sherwin-Williams painting the town red, off $24. That's nearly 8%. Priceline is down 17, about 1 to 3/10%. Intuitive Surgical giving back, I think it was in the, had moved up yesterday. I could be wrong, but it's off $10 today. That's about 1.5%. So, first place is, what are the markets doing? And I had some other charts ready, and my system was nearly crashing, one of it, just as we were coming on the air. So I was saying every prayer that I could not to crash, because it usually takes me a little while to fire everything back up. So let me come over here, and here's what we're going to take a look at. Is the market turning? We're going to go hunting for bulls and bears. At this stage here, we're going to be hunting for bulls. Now, what I can do, let me do this here. Well, I sure hope. My concern is that if I make one change here, it could screw up this chart. And what I want to take a look at, and I'm sorry that it's showing all of the different bullish and bearish candles out here. The intention was, what the heck? Let me just give me a moment here. It's going to be easier. It'll be cleaner if I do this. And if it does screw it up, then, so be it. And I'll just come up with game plan B. It's always good to have game plan B. I don't have it yet, but I will come up with one. I will develop game plan B on the fly. No, let's see if this works here. Go ahead, hit OK. Let's see. Hey, OK, we're good. Now, what we're looking at is just a 10-minute chart. So we're really delving down deep into the ES mini. We do the same thing with the NQ. I do have a chart of that, so we'll pay attention to it. Now, it's very subtle, in trying to identify a top. Why am I trying to do that? Well, when my clients and I went long on June, what was it, 26th, 25th, whatever the date was, the actual target date to exit that trade was yesterday. I don't know if I'm prophetic or pathetic. Only time will tell. I don't think it's the latter, though. And if we now, so that's one of the reasons why I'm hunting for bulls out here and looking for the bullseye. Now, one of the things I'm really paying attention to, this is a very short-term basis, it's just a 10-minute chart, but it's subtle, but it's important to take a look at, we're starting to see hammer candles fail. Now, look, hammer candles just traded on their own, do not have as much meaning as when they complete at the beginning or end of a pattern. And in this case, but they still have meaning. What's the meaning? The meaning, why does Stevie say, hey, if you see a close below the low of a hammer candle, if you're long, you're wrong? Well, it's just simply because if we go back and take a look at a lot of past history, when you start to see these hammer candles fail, let's start when they are successful. Here's an example of why they're so important when they're completing a pattern. Here, this is back on the trading desk at 4:10 in the morning on July 19th. As price is moving lower, that's the black line, diagonal line you see on my screen. Price is moving lower. Okay, and as it does that and it's doing it lower with less relative weakness, that says it doesn't really have the focus, the energy, the conviction to bust it to the downside, but you don't know where it's going to stop. But when you start to see a hammer candle form out here, that's starting to give you a pretty darn good message. Well, it was a nice message at 4:10 in the morning out here on July 19th. You can see that formed the bottom. Now, there was a pattern that was completing. But typically, when you see hammer candles, here's another one against the ES Mini 10-minute chart. 21:10 is the exact time. That's on the evening of July 19th. You can see that marked a low on a pullback out here. Market continued moving higher. The next time we saw a little hammer candle was back here after a pullback. This is at 1950. And this is on July the 20th. And then all of a sudden, and it was right here, 4:40 this morning, July 21st. And I noticed it and I said, maybe not. But 4:40, we started to see that most recent hammer candle fail out here. There was a hammer candle that formed here at 6 o'clock. At 6 o'clock, we then started seeing the ES Mini start moving to the upside out here. So it was not even an A to B. Well, I guess I could find an A to B equals CD pattern that it completed. That would be really a Gartley buy. You might say, what the heck is he talking about? Here's your A point out here. Here's your B point. And, of course, if you're not watching outside Tiger TV, you're not sure what the heck I'm saying. Where is here? And but I don't want to go through all the minutia and all the detail. But you can see it completed A to B equals CD pattern there where we've got a nice little bullish engulfing and a hammer candle. The point that I really want to make is that hammer candle failed recently. We've got another hammer candle that formed out here at 12. What does the hammer candle communicate to you and I? It tells us that bulls are trying to take a position. They are trying to find a low out here. And the one that occurred at 12 noon, well, that has failed. The one that occurred here at 12:40, that has failed. It makes sense, especially if you had missed the market move from June 26 to the move that we've had thus far. You'd say buy the dips out here. We're starting to see the buy the dipster patterns fail, and that's the early warning signs of a market that is getting ready to turn out here. Now, I want to go take a look at the NQ because it too was starting to, it had a hammer candle that I believe has failed thus far. It's got a new one that's out here that we want to pay attention to. I could turn everything off, but we're just going to pay attention to what's really important to focus on right now, and that is at 12 noon, just like on the ES, and the NQ hasn't failed. The ES has. But let's just say that perhaps the last bastion of hope here on the dipsters is really going to be at the price point of 46.3850. If that level fails, because you can see we had another hammer candle that occurred here at 12:30. So if these lows don't hold, that says we may have, and it may have been prophetic, to have actually called the date for the top 3 weeks ago. This is Steve Rhodes with TFNN. Then we got to go figure out now what do we do. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we spent some time taking a look at a couple of 10-minute charts. We're going to stick with the 10-minute charts here just for a little bit longer. We've got a new screen that is up if you're watching us on TigerTV. So we've just looked at the ES Mini and the NQ. We're going to put the weight of the market on the NQ out here. And the four panels that I have on my screen, you've got light sweet crude, left-hand panel. NQ is the panel next to that, so we'll call it panel number 2. ES Mini, panel number 3. And the 30-year Treasury note is panel number 4 to the very right-hand side. Now, we know, although it has come uncorrelated here as of late, and it's been uncorrelated for many days, so that could say maybe the correlation is going to go away. I don't know. I'm not willing to write it up. That's the correlation between the direction of light sweet crude and the, we'll call it the equity futures contracts out here. Now, what we can see is this morning during the sell-off that we've seen thus far, we saw light sweet crude, move lower. You saw the NQ moving lower. You saw the ES Mini moving lower, all in sync with each other, and we saw the 30-year Treasury moving higher. So we now have everything that is actually in sync, not the band in sync, but with regard to correlations that are normal and natural, they're in sync. So, we took a look at 10-minute charts, hey, what's working or what's failing out there. Let's go take a look at correlations to see what's happening on the intraday basis so that now we can kind of step things up, not kind of, but step things up to a little bit longer term charts, right? To see if there's any other patterns there. That's really kind of how my mind thinks, when we're looking for clues out here. It's like, anyways, that's how it thinks. So let's go back to the NQ now. And I'm going to walking through this with you live because I'm not in a short position yet, anticipating getting into a short position, want some information that says that that's what we should do out here. And so I'm just at 120, just walking you through the paces. Now, if we look at a 30-minute chart here for the NQ, one of the things that you and I know is that price was moving higher as it made its most recent high. Let me get my crosshair out here. That was at the time period of 10 o'clock this morning as it made that nice push higher. It did it with less relative energy. And at the same time that it did it, even though the candle is labeled a dark cloud cover, which it is, more importantly, because it's coming in an extended condition, it's actually a key reversal candle. And a key reversal candle has as much or more meaning, I'd say more meaning in this instance, than the actual bearish dark cloud cover candle. So that says that the high that came out here at 10 o'clock in the morning, and we're not really that far away from it, 4662.25 on a 30-minute chart, you know, could be it. Could be it. I say could be it. It says, hey, a logical retracement. The market gave us a signal. Logical retracement is in play. To the waves on the way down, we're in wave number 3 at this stage. This candle finishes in 9 minutes, so likely going to confirm the third wave. You've got a nice little bullish candle that's in place on the 30-minute, but price would have to get back about 4644.85. I believe that is the 30-minute bottom of its TAS market profile, which price is now down below. Not a good thing. Another indication that the NQ is starting to potentially turn out here. We also have Stevie's red line. That's that oscillator unchanged line that had crossed through the black line out here, and you can see, you pay attention to that. When did it last have a bullish crossover? Well, that was right here at about 4:30 in the afternoon. That was when price was at about the 4606 level. That took you from 4606 up to about the crossed right here, 4606 to about 4649. You know, if you just played the crossovers out here, so nice momentum tool. Now we've got the bearish cross that's in place, so that's the 30-minute. Let's just stick with the NQ here for a few more moments. Let's go take a look at the 2-hour chart, see what it is communicating to us. And it, too, has been pushing higher and doing it with less relative energy. The problem here is that we don't have a cavalry. We do not have a bearish reversal signal or candle on the 2-hour chart. Yeah, we just don't. It's just not there on the 2-hour chart as it had pushed higher. However, price is below Stevie's red line out there. That says that sellers are the ones that are in control as we speak. And price right now got its head or its butted up against the bottom of its TAS market profile. So 46.43 is a level of support. If that holds, that's bullish. It hasn't broken through it to say that you've got you know, maybe there's some more topping information warranted. So I'd say the 2-hour chart is neutral with regard to its signals out here. If we take a look at the 5-hour energy drink chart out here, this says similar thing to the 2-hour chart. NQ completes a 1-to-1 A to B equals CD to the upside. And once it did that, it just started moving sideways. Remember yesterday at 2 o'clock, we were looking at this specific candle. We said it was a wide, wow, that's really weird how it's done that twice today. I've never seen my system do that. That doesn't mean anything. It just means, you know, but this wide-ranging bar right here, yesterday we said, you know, it's a fairly wide-ranging bar. The market's not going to end on a wide-ranging bar, which it didn't, because for the next 20 hours, right, next 20, almost 24 hours here, all we saw were small-bodied candles with price moving sideways. We still don't have a bearish reversal signal, even though price has been moving higher, doing less relative energy out there. So the 5-hour chart, you know, is somewhat neutral too. So it's just the intraday charts, the 10 and the 30, that have given us the best signal. On the daily chart, the 10 and the 30 will be correct if you were to see a price close below 45.79.16 to be exact, but don't worry about being exact. But 45.79, we're at 46.43 right now. That's 75 points to the downside. But if you were to see that type of a move, that would be the icing on the cake that the move to the downside has begun. How long would it last? It will last until July 31st. If July 31st is a trading day, I don't know if it is. If not, it'd be probably the day before, or the day after, or 2 days before, and 2 days after, depending on when it fell out there. That's my best inclination as to what the market wants to do out here. So we could go through. So it would basically do the same type of thing with the ES Mini and so forth. But I really think it is about the NQ. I heard just a snippet of Tom's show yesterday, and he was talking how the NQ had got some, or the Qs had gotten some volume in there and that they wanted to go higher. So that's worthwhile to pay attention to. Another signal that would help us to identify what the markets are really doing, whether this is just a retracement and a nice move that we've had higher, and it still may be, right? We've only seen 10 and 30-minute charts give us any signals out here. In fact, on the ES Mini, as an example, it has completed a Gartley buy pattern. In 5 minutes, we'll know if it's completed a Gartley buy pattern. What is that? Well, your A point out here was at about 3:30 in the morning. This is on the 21st, it looks like. Yeah, the 21st. And then your B point was down here at 6 a.m., a little hammer candle, which failed. And your C point was out here at 10 o'clock this morning. 1 to 1.272, A to B equals CD. That's a Gartley buy because of the retracement that it has done off of the lows back here at about 4:30 in the morning back on July the 19th. So it looks like about a 0.786 Gartley. If price gets above, which it looks like it's trying to do as we speak right now, the high is 2161. The current session high here is 2161. So just one more tick to the upside in the next 3.5 minutes would give you a key reversal bar at the completion of an A to B equals CD to the downside inside of the ES Mini out here. At this stage, looks like we have a bullish candle. We really won't know for another 3 minutes. I don't know how this session here is going to end, but it's coming at the end of a what is a Gartley buy pattern. We just need the cavalry to show up, and right now that bullish engulfing is the cavalry. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Dow's off 79. S&P is down 6. Some good conversation inside of the Tiger's Den. Dano asked if I could take a look at talk about the direction of gold. If we are at a top in the ES, the NQ, the Dow, I am short GLD. One of our other Tigers has massive support at the 1300 level inside of gold. That is true. Danny in Atlanta says, tell us where the yen is going, and you will know where gold and the market go. So let's try to put all of this together. For those of you that were listening in a few days ago, we were taking a look at this chart here for gold. I believe it was this chart. It says 30 minutes. Yeah, this chart here. I didn't touch this chart since we were, well, that's not true. I did touch it down here at the bottom. But I did touch it up here at the top. Remember, we were taking a look at this nice little cone, this nice little wedgie pattern that had formed on a 30-minute chart for gold. And what we said was, when you have a nice little pattern like this, symmetrical pattern, the cool thing about it is that when price breaks topside or downside, upside, downside, however you want to refer to it, we can go back to basically the base of where that pattern formed to give us a price projection. That's that little black rectangle. Well, gold went ahead and broke it to the downside. And if we take a look at our measured move basically here to the downside, you can see all I did was just move that rectangle. And it almost hit it, probably to the, we use this as a guideline, but you can see how that's exactly what took place as gold was moving lower into about 9 o'clock last evening. Now, let's take a look at what was occurring at 9 o'clock last evening. Price was moving what? Lower with less relative energy. And as it was doing that, on the very next session, 21:30, so 9:30 in the evening, that is when the cavalry came in. That is when we had a nice little bull sash, very similar to a bullish engulfing candle. The difference is in the equity futures market because it's always open. The two candles are very similar. Same thing in the in trading currency pairs out there. Nonetheless, you get a nice little bullish reversal signal out here. And we can see that now what price has done, the interesting thing here is we may be near the end of the bounce inside of gold. Why? Because what's interesting about the nice little wedge pattern, oftentimes on a bounce back up into it or a retracement back down into it, what you're going to find here, and I'll put a little line, you're going to find that when you can get right to, where's that extended line, horizontal line? Right when you can get right to the apex, right to the little corner, that actually acts as a resistance or a support level. So we can see it's gotten up to wave 6, the little shooting star that took place as of 1:30 out here. And that may be the extent of the move. If I was playing this intraday, I would absolutely have had that as a price target. And you had to make sure you either took that profit or you had a nice little tight stop in there. So gold pattern-wise, from a 30-minute chart standpoint, is really doing everything that you and I have looked at over the course of the past couple of days out here. So, you want to be able to use these patterns and spot them. You don't really have to be much of a technical analyst to be able to see, to draw, little wedgies, little triangles, and where the apex lines up and, use that as a potential level of support or a resistance level. So we know that gold now was coming in there with a wide-ranging bar, but you can now start to see that the bears are trying to move up here. If price is able to take out that level, where is it headed to next? That's an excellent question, and I can answer that for you. Where gold would bounce to, don't you love it to just have conviction behind it? Where gold would bounce to is probably 1344, because as one of our denners put, P, gold does have massive support. At 1315 is the number that I would be looking at. That happens to be the bottom of its TAS daily market profile. That's the top portion of my screen out there. And until we see gold close below that level, anything could happen. It could be just simply a narrow trading range, with that trading range being between the 1315 and right now the 1344 level. So 1344.90. And can gold get above that? Yeah, absolutely. And if it does, then that says it can go all the way back up to the 1377 area. And if it stays below that, all we're seeing are just these natural movements in these intraday time period charts out here. In the case of silver, 2025 is the number. There was some other input here about, hey, pay attention to the yen. And Danny in Atlanta could not be more accurate out there. If we take a look at and then we'll try to tie this back into the question about the market, Dano. So we'll do that. And if we take a look at the gold contract and the Japanese yen, this is what Danny in Atlanta was referring to. This chart here, this is a daily chart. It's the continuous contract for the Japanese yen. futures for the silver futures in the center panel, and gold contract up at the top. Now, if you're watching this, you're going to see just simply, an absolute match with regard to the direction of these three elements out here. And I asked the question a few days ago, last Friday, I believe that it was, who's the dog, who's the tail? I believe it's the currency pair. Danny in Atlanta believes it's a currency pair too, because it says, hey, figure out where the yen's going, and you'll know where gold and silver are going to. And we're going to go back and take a look at it and say, oh, hey, it's also going to answer Dano's question with regard to the ES, the NQ, and the Dow, just the entire stock market. So we know that gold hit a nice level of support. What have we seen the Japanese yen do? Japanese yen has made a huge currency move today. It is getting stronger in this chart here by moving higher. The other way that I have the currency pair, you'd see it moving lower. So you got to be paying attention to what it is that you're putting up on your screen out here. Kind of a I won't call it a key reversal session. I'll call it an outside day because it's not an extended condition out here. But you got a nice little, the prior day's high and low has been surpassed. You've got a bullish engulfing as well that's wrapping around the body of yesterday's candle out here. It's doing it in conjunction with silver bouncing, with gold bouncing. So you're absolutely right. Now, where is the yen? If we take a look at the future contract, where is the price level that should be resistance? That answer is 0.009634 to be exact out here. So, we see the market doing the same thing, gold and silver, that is, okay? So we can see that correlation. That is very clear. So it's very cool, right? It all comes together. And that's why we look for clues and we look for divergences to assist us with regard to what the market wants to do. Now, to go back to Dano's question out here about with regard to the market, well, guess what? With regard to the Japanese yen, it doesn't just influence gold and silver. I think we made that point for you. Guess what? It also influences the 30-year Treasury. You see, the bottom panel of my chart is a 30-year Treasury. The top panel of my chart happens to be the Japanese yen. So, we've got Danny in Atlanta. It's not just gold. We can say it's also the 30-year Treasury. And so to the extent that we believe the dance or the opposite dance between the U.S. Treasury and the stock market, that's how we pull the yen. That's how we suck it in by, having a nice little sake evening. That would be good. But that's how we go ahead and we put the whole thing, we stitch the whole thing together. So we started with 10-minute charts looking for signals. Let's go see what we can see on a 30-minute chart. Now let's go to a 2-hour or 5-hour. They're saying, not just yet. The daily's saying, what the heck are you talking about? I'm not done going to the upside out here. But yet we're going to go ahead and take a look at the influencing factors. Folks, if you want to accomplish anything in life, understand what it is that influences you. If you want to help somebody else accomplish something in life, help them understand what influences them. All that you and I do here when we take a look at these stock charts is understand what influences the, where gold or silver or where the bonds are going to, so that we can put all these things together, just to give us a probability of where the market is likely to head. So I hope that helps answer everybody's questions in the den with regard to what Stevie sees with the yen and its impact on very muy importante instruments. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back to the show, folks. Dow's off 84, S&P's down 7, NASDAQ Composite down 12. We're spending the afternoon here hunting for clues inside the market to get a feel for whether or not they turn as in or not. I don't think we have any conclusive pieces. We've got pieces of the puzzle, but for me, it hasn't all come together here just yet. What other things will we take a look at out here? You know, if I take a look at what's going on inside the Dow's giving us its first clue with its advanced decline oscillator right now trading below zero, just slightly below zero, but enough below zero to say that sellers are in control. So we want to watch between the hammer candles, so we're going back to the 10-minute charts out here, between the hammer candles that are failing on a 10-minute chart, and now we've got a cool 30-minute chart to keep our eye on as well, because, you know, in this nice uptrend out here, the nice 0.618 or 786 Gartley buy pattern that in essence confirmed out here at 130 did not complete a key reversal session. It was not a bullish engulfing. It was a piercing candle, which is not a bad bullish candle, by the way. And so we do have a confirmed, if you've got, especially if you have a close higher by 2 o'clock, you'd really have a confirmation of that Gartley buy. So in a strong move to the market moving to the upside, you start to see these patterns fail. They're really providing us with clues of of an early turn. Now, you know, there's no real news right out here, right, to tell us that. That's why you and I, we did what we did inside the market, and why we just looked at this chart here and we said, geez, what the Sam heck is going on with the Japanese yen? You know, if we take, again, this is the other Japanese yen chart that I've got out here. This one here, I'm taking a look at some market profiles, real resistance up here. And so if it's moving higher, it's weakening against the U.S. dollar. Lower, it's getting stronger. And it's a big move today. So I don't know what the news was that was out there, but you can see the influencing factor that it has on the stock market out here. Now, with regard to the other two indices that we track, the New York Stock Exchange, it's still in the hands of the buyers. It's not below zero. And the same is can be said and should be said and will be said about the NASDAQ Composite. So when you only have one of these three indices, and you've got one that tracks 30, and the other two that are about 3,500 each, give or take, I'm going with the 3,500s. However, The last piece of information is the S&P 500, and I'll go with the VIX index, and I'll give you the number exactly. Right now, the VIX is trading at 1270, and the key number to be paying attention to is 1267. If the VIX can close above 1267, even by a penny, and these numbers will change. Unfortunately for you, at 4 o'clock, these numbers will change a few, but I can only give them to you as I've got them right now on my screen at 145. But if you were to see a close above that, it says at a minimum, we ought to see the VIX go ahead and make a move for the 1539 level. You close back below it, the market was just reacting to the currency pair as it should have, and maybe no big deal out there. I don't care if 3 weeks ago or 4 weeks ago or 10 years ago, which I could have done it 10 years ago, giving you a date when the market ought to top. But I said the market would top between the time period, or should top between the time period of July 20th and July 23rd. July 23rd is not a trading day, so that meant Wednesday, Thursday, Friday out here. And even with that, it means you still go hunting and looking for the signals to tell you that it's really done that. So that's just Stevie's triptych, and sometimes there's a detour. Sometimes you don't even find out about that detour till you're driving along the road out here, and that's why you end up subscribing to newsletter services like Mastering Probability or some of the other great services that we have here at TFNN. So that's another thing I'm watching, would be the VIX, for a clue out here. And that's really all I got. I don't think I can. Is there anything else? Anybody got any questions? Because I don't know what else. I really think it kind of covered it all. Kind of, what am I going to do to fill in the next 4 minutes and then the next segment out there? Gosh, I don't know. Well, there might be a question somewhere along the line. I tell you what, until there is, let's go look at some individual equities. Let's go see what behavior they've got going on here. Let's look at things that are moving to the downside. Let's take a look at Sherwin-Williams. SHW is the ticker symbol, down $22 at 7%. Looks like on an earnings or revenue miss out here. So they were out with numbers. Let's not worry too much about the numbers. Let's just worry about what shareholders are saying about the numbers. They clearly don't like it, but this thing has moved down big volume, 2.3 million shares. Last time this had any volume was to the downside on March 21st. It was a one-day wonder. It had 4.5 million shares to the downside because it just simply fought that off and moved higher. Now, price got down to test its weekly TAS market profile. Point of control has since bounced from that level. Nonetheless, with that gap down, almost a island top. It wasn't, but almost an island top. Looks to me like, and with this volume, price ought at least push down into the bottom of its weekly profile. So that says somewhere around the 278 type level. And you'll want to watch to see what volume looks like on a daily basis, perhaps on a weekly basis, but a daily basis as it tests the June 27th level. That is SHW, Sherwin-Williams. Price line, PCLN, that's down $18, down 1% out here. Just really an inside day, not really giving us a whole lot of information. Shows up on my screen just simply because I'm looking for big dollar movers versus percentage movers out there. Not that we couldn't switch that. You got ESND. ESND is Essendant. That's up 36%. Holy camole out here. Is camole even a word? If it were, it would apply to this stock chart here. This looks awful. This looks just horrible. Is anybody in the money on this equity? Oh yeah, sure. People are in the money, but it's almost back to the levels in 2009. It is in 2009 levels out here. Where's this thing headed to? Probably back to the lows of March of 2009. Don't know what Essendant does, but it's not doing it right, that's for sure. Hey, let's go out to Chicago and speak with Robert. Robert, thanks for calling. Thanks for holding. How are you doing this afternoon?
Hey, Steve, thanks very much.
Good. You've brought up a equity, Acacia Communications. Looks like this hasn't been around for too long, or maybe I don't have all the data, but it's been a nice move ever since the IPO. Looks like on May 13th. So tell us what you're doing, how we can help you.
Yeah, I was wondering if, and again, I would, if you would put it on a longer term, on a pullback, I would like to take a position in this and hold it for a while, maybe 3 months, 6 months. Where do you think I might get this on a pullback?
Good, really good question. What do they do? Do you know what kind of communications? Do you know what Acacia Communications does? Just out of curiosity. If you do, great. If not, don't worry about it.
I don't.
Well, it makes two of us now. We're so unanimous. The first place I would look at is probably 48.69. Now, we don't have a lot of information on this equity, so it's really going to be limited. But the first pullback level, and from a daily basis, this is giving you a key reversal. So it's completed its first A to B equals CD. That A point was the low out here on the day of May 19th. Come on, work. Why isn't it grabbing that? There we go. Your B point looks like it was on June 16th. Let's see, the high 45.75. Yeah, either June 16th or the 17th. Your C point, the retracement, was into June 27th. And what it did today, it completed a 1 to 1.618, A to B equals CD to the upside. Oftentimes, if you had Tom's book, The Art of Timing the Trade, there's a page in there, there's a sentence in there, and wait, if you can, Robert, that says once you do a 1 to 1.618, A to B equals CD, you typically see something else. Well, today is something else. But hold on through the break if you'd like, and we'll try to figure this out for you. All right, my friend?
Sure, thank you.
All right, this is Steve Rhodes with TFNN with Robert in Chicago. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back. Dow's off 102, S&P is down 10. We're on the line with, I like that on-the-line stuff. We're on the line with Robert in Chicago. We're taking a look at Acacia Communications. ACIA is the ticker symbol. Just completed a nice 1 to 1.618, A to B equals CD to the upside. And the reason why I say completed is because today's candle, as we speak right now, is a nice key reversal, bearish engulfing candle. So, Robert, the first price point that I gave was 48.69. That was the bottom of its TAS daily profile. At 49.81, it's also a 0.382 retracement. So that's the first place that I would be looking at. You'd like to see volume decelerate as it were pull back into the area, and you would also like to see the market give us a signal that it's ready to resume moving higher. It does look like to me, based on these intraday patterns that we've looked at that are beginning to fail, that the move to the upside is over for a little while. And we should see a retracement. That retracement could last, 7, 8 trading sessions or so. Could even be longer, but that's kind of the gauge here. The next level, if it's able to blow through there, volume or not, that you would be looking at is probably between 41.12 and maybe about 45.70. So there's just not a ton of information. We'd probably really have to go take a look at intraday charts out there. But I would say on Acacia, that's what I would be looking for. And during the break, I had gone ahead and put up just a chart of the S&P 500 just to make sure that this thing, was tracking the direction of the stock market, and it most certainly is. So that's why I say you maybe want to try to time this around the next market turn.
That's perfect, Steve. And is the that high 63, 88 or something like that, was that a high volume high?
No, the actual high, and I won't even really call it a high volume high, so to speak, because it had 2.2 million shares. That was on July 19th. And, it did 1.5 million yesterday. So a high volume high, you like to see it just have, it's a massive, spike volume bar that just stands out, looks like it's the World Trade Center kind of a bar at the bottom. So, yeah, we really won't call that. It is I don't know what they do, but it's certainly, from an IPO standpoint, it's certainly the way you like to see something roll out. So, nearly everybody, with the exception of today, has been in this equity, in the profit. But it does look like it's getting ready for a pullback. So I just watch those areas and watch volume as it's coming back there. All righty?
Perfect. Thanks very much, Steve.
You bet. Thanks for calling. Thanks for holding on. That was Robert in Chicago. So, folks, we're about to end the session out here, but that's good because we get to go to our man, our resident polar bear, David White, and then, of course, we've got Tom O'Brien show and Thursdays. Is Andy back? I know he's out partying, right? I don't know if maybe somebody can give me the high sign. No, he's not back. So just simply Tom O'Brien will take it home from 3 to 4. But I'm not going to sign off for another minute and 20 seconds out here. We didn't look at things that are moving to the upside. Let's do that. Let's take a look at Biogen, up a nice 7% almost. This thing is moving higher. Got a nice little, what looks like a doji today, smells like a doji, feels like a doji, looks like a doji. In one sense it is, except it's really a wide-ranging bar when you take a look at yesterday's close versus where we're trading right now. But what it is trading into with a lightish type volume is a big gap down. That was on June the 7th. That was 8.8 million shares to the downside. Today, you're only 4 million shares to the upside. So good volume. But we can see the prices run into resistance, and that's the resistance of its TAS weekly profile out here. So Biogen, nice candle session. It's in between resistance, maybe support. Support could be old resistance, which would be the high of June 7th out here. So you're going to want to watch 264.73. So, folks, stay tuned. David White will be up next. Thanks so much for joining me. Have a terrific Thursday, and we'll see you on a fantastic, fabulous, fun day Friday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.